Shopify's own word for this quarter was a monster quarter. Revenue was $3.58 billion, up 34% year over year, well ahead of the roughly 20-something% the market had penciled in. Gross merchandise volume, or GMV, reached $115.6 billion, up 32%. Free cash flow was $654 million, an 18% margin. Shopify's president said GMV, revenue, gross profit, and free cash flow all grew more than 30%, which is rare. The genuinely hard part is that growth and margin improved at the same time. For most companies, you trade one for the other. Grow faster and margins slip. Protect margins and growth slows. This quarter, Shopify grew revenue 34%, while operating margin expanded from 10.9% a year ago to 13.6%, and operating income jumped 68%. Break down the revenue, and you can see where the engine is. Subscription solutions, the monthly fees merchants pay, brought in $802 million, up 22%. Merchant solutions, mostly payments, installments, and logistics, the businesses that take a cut of transaction volume, brought in $2.78 billion, up 37%. In other words, Shopify increasingly looks like a company that scales with its merchant sales, not just a software company collecting monthly fees. But there's one thing to watch in this quarter's numbers. GAAP net income was $1.5 billion, which looks large, but $1.06 billion of that came from mark-to-market gains on Shopify's equity investments in other companies. That part has nothing to do with the core business. Strip it out, and net income from operations is $439 million. To judge Shopify's quality, look at that $439 million, not the $1.5 billion. On the call, the analyst questions almost all circled one word: AI. In this roughly 1-hour call, AI was mentioned 121 times and agent 40 times. What management kept coming back to was Agentic-Commerce. The idea, as more and more shopping is done by AI agents on your behalf, from search to price comparison to checkout, Shopify wants to be the default infrastructure that actually completes the transaction underneath. That is the core of the bull case on Shopify's valuation. It is positioned at the entry point of commerce in the AI era. Analysts from Oppenheimer, JP Morgan, Morgan Stanley, and Goldman mostly pressed on how AI reshapes Shopify's merchants, its take rate, and its international and enterprise expansion. Management also gave the next quarter's shape. For the third quarter, they expect revenue to grow at a low-30s% rate and gross profit dollars in the mid to high 20s. Still high growth. Put the quarter together, and Shopify delivers something rare: growth and profitability improving at the same time. 3 months from now, Q3 is the next check. Watch 3 things. First, whether Merchant Solutions, the take-a-cut engine, can hold its 37% growth. Second, whether the operating margin improvement is one-off or durable. Third, how long it takes for Agentic-Commerce to turn from narrative into revenue you can actually verify. Get those 3 right, and Shopify's high growth and high valuation truly hold up.